Welcome back to Roxham TV. I'm your host, Jamie. Something very interesting is happening in the market right now. Bitcoin is breaking above $76,000. Ethereum is also surging and crypto is rallying hard, all while war risks are rising and global uncertainty is still really high. So today we're going to break this down step by step. Why crypto is moving up when it shouldn't be, what institutions are doing behind the scenes, and whether this is just a short-term bounce or something much bigger. We'll also cover a major shift happening in tech. Meta stock is rising after reports of massive layoffs as the company doubled down on a $600 billion AI bet. Then we dive into Elon Musk XAI, why they are hiring Wall Street experts to help train the AI, while the company itself looks like it's is being rebuilt from the ground up. We also talk about new US regulations on prediction markets and what that means for the future for trading and also Web3. And finally, we break down what could be a big turning point in DeFi, why yields are collapsing, and whether we are entering a full DeFi winter. And after all that, of course, we'll be joined by our special guest of this show. So, Elisenda Fàbrega, who is the legal expert at Brickken, to help us understand one of the most important topics right now, which is crypto regulation, tokenization, and what actually applies in the real world. So, there is a lot to cover today. Without further ado, let's just dive right in. So, the first news, of course, we have to get it out of the way, which is Bitcoin. So something very unusual is happening in the market. While global tensions are rising and the Iran conflict is still ongoing, Bitcoin is going up. Not just going up, but is breaking higher. If we take a look at the Bitcoin's price action on the price chart right here, Bitcoin managed to bounce off. I mean, we didn't even have to retest the rising support on the hour side. So right now it's retracing a little bit from its high of 76.1K, somewhere around that. Right now it's sitting at 74.1K. So Bitcoin surged past $76,000. Ethereum also jumped up. So if we hop on to CoinGecko, right now, Ethereum is sitting at 2,300, somewhere around that. And if we also take a look at the general total crypto market cap, on the past month performance, we have been going up. So right now, sitting at $2.6 trillion. So the big question everyone is asking, why is crypto rallying when the world looks so uncertain? So let's break it down. Over the past 24 hours, Bitcoin jumped more than 5%. Ethereum surged over 10%. Altcoins also follow with very strong gains. And this wasn't a slow move. It was a very fast rebound. At the same time, we saw massive liquidations happening. So if we hop onto the liquidation heat map, so over the 24 hours period, $330 million were in short position were wrecked, basically. So most of that was short positions in compared to the long position. So that means traders betting against the market and got caught off guard. So part of this rally is also a short squeeze. I mean, this is just how market work in general. But here's what makes it interesting. Normally, during geopolitical conflict, oil goes up, gold also go up, risk asset would go down. But this time, oil is extremely volatile, gold is not exploding, and Bitcoin is rising. One major reason, just to explain this scenario, is institutional demand. So what are the big guys doing? So big players are, again, buying. So for example, MicroStrategy. So we take a look at the balance Bitcoin holdings. So MicroStrategy continues to accumulate Bitcoin very aggressively. If we take a look at the holding, if they have over 761,000 BTC holding on the balance sheet, billions of dollars added in just the past few weeks. other companies are doing the same. So Meta Planet is raising hundreds of millions of dollars to increase its Bitcoin holdings. On the Ethereum side, large players also accumulating and staking. So this is not just retail buying. This is big capital coming back into the market. And speaking of big players, of course, we now have to take a look at the spot ETF, like how the inflow outflow is doing. So last week alone, so if we just focus on the right column, I mean, you will notice that the right column, everything is just like happen to be green, and we are in BTC. If we hop onto the USD value, you know, like over $1 billion inflow into digital asset funds just last week alone. Bitcoin made up about 75% of that, of course. US spot Bitcoin ETF have seen multiple days of inflows in a row. Ethereum ETFs are also seeing fresh demand, especially with new staking ETFs entering the market. So more inflows, that means more liquidity and also more buying pressure for BTC. Now, let's talk about the macro side of things. Of course, we still have the war ongoing in the Middle East. We have the rising oil prices, uncertainty around inflation, and the upcoming Fed decisions. But here's the key shift. The market is starting to absorb the bad news. But it doesn't mean like we're not like spending another few months in a bear market, but like judging this rally, it very much looks like a relief rally after all. But like as long as Bitcoin managed to hold this rising support trend, both on the price charts and also on the hour side, like the bull is still in control. Though like this region I drew weeks ago, I just love how TA works, but people still don't trust it, but whatever, you do you. So like this rectangle, I drew weeks ago. So there is a strong resistance around this like 77 or 78 to $80,000. So this is a region I'm watching very closely. Like even though this rally, it has been nice and bulls looks like it's in control, because like we didn't even have the time to come down and test this level of support and bounce back off. So that means the bullish momentum is likely to be like quite strong for the moment being. Okay, everything is short term. Like as long as we hold above this rising support on Bitcoin charts and also on the RSI chart, like the bulls are still in control. Like that being said, I'm not saying that we are completely out of the wood yet. Like we have to judge from like the price, the momentum. Like when we enter this rectangle, like how long we're gonna spend inside this rectangle, and we have to judge the strength of the candles, the daily candles as well. But anyways, this relief rally, it hasn't been like too surprising, because like if we take a look at the monthly return of Bitcoin, like this month in March, we generated 11%. So that is like a really nice palm. I have to give it that. So however, if we scroll back and to October 2025, you notice that the reason why we have this like relief rallies, because like the previous 5 months, it has been extremely painful. So pumping a little bit, like even below $80,000, it got people very excited. But like zooming out, like we're not out of the wood yet, okay? But like there's also another interesting and very important signal. So large holders, and we go to what the whales are doing. Large holders are buying again. So wallets holding between 10 to 10,000 BTC are increasing the positions. This group now controls over 68% of the total supply. Historically speaking, when whales accumulate, it often signals a market bottom or early uptrend. So what is the market trying to tell us? Like basically it's trying to tell us, like even with geopolitical risk, even with a macro uncertainty, crypto is still holding rather strong. And that could mean something bigger is changing. Maybe this is just a rebound, or maybe Bitcoin is starting to behave more like an independent global asset. Though this is going to be a very gradual process, like being an independent global asset, it doesn't happen overnight, but looks like it's happening gradually in a bear market, which is where we are right now. So going forward, there are a few things we need to watch. Like first of all, is the ETF flow. Where is it? ETF flows. Wait, again, sorry about that. So ETF flows. Are institutions still buying? The Fed decision? Will rates stay high? Oil prices, like will inflation come back, and geopolitical developments? Because if these factors continue to stabilize, this rally should have more room to run. And it also happened to align with the TA. All right, so let's shift gears a little bit. Let's hop on to what some companies are doing, like especially in AI. So Meta stock is going up, but not because of some new, very promising product. It's going up because the company might cut up to 20% of its workforce. That's around 16,000 jobs. And the market is actually rewarding that. So the big question is this real efficiency or a warning sign? So let's break it down what happened. Okay, Meta shares climbed nearly 3% in pre-market trading after reports of these layoffs. Investors see this as cost-cutting, but this is not just about saving money. This is about funding something much bigger. Meta is going all in on AI. So Meta's AI spending is huge. For 2026, the company is expected to spend up to $135 billion. That's almost double what it spent last year. And by 2028, Meta plans to invest around $600 billion into data centers. That is, of course, an enormous bet. On top of that, $14 billion into scale AI, buying AI startups, and hiring top researchers with massive pay packages. Mark Zuckerberg, he even said 2026 will be the year Meta builds personal super intelligence. But so far, the results aren't there yet. Meta's AI models have struggled. Llama 4 didn't even meet expectations. The next model got delayed, and the new version is almost behind schedule. Reports said Meta's models are still behind competitors like OpenAI, Google, and Anthropic. And here's the most surprising part. Meta is even considering using Google's AI model temporarily. So the company is spending over $100 billion on AI might need to rely on a competitor. To support all this spending, Meta, of course, need to cut costs, and there's where the layoffs come in. The cuts are expected to hit non-AI teams, middle management, and administrative roles, especially areas where AI tools can replace human. So this is not just restructuring. This is a full shift toward an AI-first company. So for this news, there are actually two ways of reading this story. The bullish view is that like Meta is becoming more efficient, AI is replacing jobs and improving productivity. The bearish view, of course, Meta is cutting real jobs to fund a very expensive bet that hasn't worked yet. Because unlike companies like Amazon or Microsoft, Meta does not have a cloud business. It cannot rent out its infrastructure. So this entire AI investment has to pay off through Meta's own products. Right now, Wall Street is focusing on the efficiency, but the bigger question is this: is Meta building the future of AI, or just like spending hundreds of billions on something that may not deliver? Because if the models don't improve, this could become a very expensive mistake. So speaking of AI companies, let's also move on to a second one we have to cover today, like of course being Elon Musk XAI. They're doing very interesting stuff right now. They are hiring bankers, traders, and credit analysts to teach Grok how to understand finance. So we are not just talking about basic finance. We are talking about the deep and complicated parts of Wall Street. So what I mean by that. I meant like leverage loans, distressed debt, mortgage-backed securities, or maybe private credit. In simple words, XAI wants Grok to stop sounding like a chatbot that reads market headlines and start thinking more like an actual banker. But here's the problem. This big hiring push is happening at the exact same time XAI itself appears to be in some chaos. So let's break it down what happened. So according to Bloomberg, XAI is hiring finance professionals on a contract basis, paying around $45 to $100 an hour. These people are not being hired to do live deals. They are being hired to train Grok. The goal is to teach the model how real finance professionals think through things like credit risk, deal structures, capital markets, distressed investing, or structured products. This is some very serious ambition because most AI chatbots today can explain finance terms, but very few can actually reason through very complex financial structures the way a banker or portfolio manager would do. And XAI is actually not alone. OpenAI has reportedly been doing this very similar thing through a project called Mercury. That effort has involved former bankers from firms like JP Morgan, Goldman Sachs, Morgan Stanley. So the goal here is still very clear. So like train AI to take over the very junior analyst work that usually means 80-hour weeks, endless spreadsheets, and financial modeling. So this is becoming a real race. You can build the AI model that actually works in high-level finance. But however, this is where it gets even more interesting for this story. So the company training Grok to think like a banker is itself going through some major internal turmoil. Last week, Elon Musk said XAI was not built right the first time and is now being rebuilt from the ground up. And of course, that is a huge statement. And the team turnover is quite serious. So of that, 12 original co-founders of XAI, only 2 remain. A long list of important people have left, including researchers who were very critical to Grok's development. So on one side, XAI is trying to look like the future of AI finance. On the other side, the company behind it is admitting the foundation is being rebuilt. Like personally speaking, I'm not very concerned about the internal chaos of Elon Musk company because reading about Elon Musk, looking at his news every single day, and we know that he has a history of rebuilding stuff from the ground up, and he happened to deliver really good products. So that is just like the track history of Elon Musk. But then there is like the ownership structure. First, XAI merged with X, of course, like the old Twitter platform, that in early 2026, SpaceX acquired the combined XAI and X entity into a giant all-stock deal. That made the structure even harder to follow. Now Tesla has also invested in XAI, and Tesla sold XAI hundreds of millions of dollars worth of battery products. So investors are starting to ask, where does one Elon Musk company end and the next one begin? And who exactly benefits when all of these companies are doing deals with each other? XAI is reportedly valued at around $250 billion, but over a 6-month period, the company reportedly made only $250 million in revenue and lost $2.5 billion. So we are talking about a company with huge losses, a massive valuation, and a founder who says it needs to be rebuilt entirely. And yet, it may soon be wrapped into a SpaceX IPO at a combined valuation that could reach $1.5 trillion. That means future SpaceX investor may also be buying exposure to XAI and X, whether they like it or not. And the problem doesn't just stop there. Grok's image generator has has come under scrutiny in several countries after it was used to create sexualized deepfake images. So the product is now under investigation in the US, in Europe, India, and also in Malaysia. And Grok has even faced temporary bans in some countries. So while XAI is trying to build a serious financial AI product, its flagship chatbot is also dealing with major trust and safety issues. So, question everyone is asking, what is Wall Street really looking at here? On one side, there is a real opportunity, an AI model that can truly understand financial structure, how understand structure finance, like could be very extremely valuable. That is a real business case, of course. But on the other side, there's a huge gap between the product story and the actual reality inside the company. Because if the model is still being rebuilt from the ground up, what exactly are these finance experts trying to train? So this is a question we are watching here on Roxham TV. And of course, as soon as we get more updates about the product of XAI and X, we'll be breaking the news here on Roxham TV. So we'll take a short break from here, and when we come back, we are diving into more financial regulations that is happening in the US, particularly targeting prediction markets. So don't go away. We'll be right back.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxham, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxham, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index is collapsing. And while you cling to dollars, well, we'll Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxham TV, and thanks for sticking around with us after the break. We're now diving into a major shift that is happening in the US, particularly the financial system of US. So we have to talk about prediction markets, like platforms where people trade contracts based on future events. They are now officially moving under federal regulation. So the CFTC, or Commodity Futures Trading Commission, has issued new guidance that formally brings these markets into its regulatory framework. So according to the CFTC chairman, the era of prediction markets operating without clear rules is now over. So let's break it down what that means. Under this new guidance, prediction market contracts are being defined as financial products. These contracts are also known as event contracts. They allow traders to bet on outcomes such as elections or sports result or geopolitical events. Platforms that list these kind of contracts will now need to operate under the Commodity Exchange Act, which is the same law that governs many derivatives markets. This means prediction markets are no longer seen simply as speculative tools, but as part of the financial system. So instead of trying to suppress prediction markets, the new strategy is to regulate them clearly and bring them into the legal system. So under this new framework, exchanges hosting prediction markets will become the first line of defense against manipulation. Platforms must build systems that can detect suspicious trading activity, price manipulation, and also settlement irregularities. They will also need to verify that the contracts they list cannot easily be manipulated. For example, sports-related contracts may require coordination with leagues and governing bodies. This is meant to prevent insiders, like players, like referees, from exploiting private information. Another major concern is for regulators is data integrity. Most prediction market contracts settle in cash based on real-world data. So regulators now require exchanges to ensure that data sources are accurate, the information cannot be manipulated, and settlement results are transparent. Platforms must also create technical safeguards to prevent unauthorized access to sensitive data before it was released. Violation could lead to federal investigations or enforcement actions. So this regulatory move comes as prediction markets are growing so rapidly. So here's a graph comparing 2021 of prediction markets and absolutely exploded ever since 2025. So of course, the two major platforms we have to look here is Kalshi and Polymarket. They saw a combined trading volume reach about $18.6 billion in February 2026 alone. That was the 6th consecutive monthly record. And by mid-March, trading volume had already exceeded $8 billion. In other words, this is no longer a niche market. Prediction markets are becoming a major financial sector. However, prediction markets are also facing controversy. Some state regulators argue that these platforms may fall under gambling laws, not financial regulation. For example, courts in Ohio recently rejected a legal request from Kalshi to block state oversight. Several other states, including Utah, have raised concerns about contract linked to sports betting. There are also ethical debates. Some prediction contracts involves sensitive topics like war outcomes, like political deaths or assassination. So recently, traders reportedly made about $1.2 billion betting on geopolitical events shortly before US airstrikes on Iran, raising concerns about potential insider information. In response to that, lawmakers have proposed a new bill called the Death Bets Act. So the proposal would ban prediction markets tied to war or death or assassination outcomes. One big question remains unsolved though. Should prediction markets be treated as financial derivatives or more like a gambling product? The CFTC argued it has exclusive jurisdiction over these markets, but some state regulators disagree. Legal experts say this dispute could eventually reach the US Supreme Court. So for investors and companies, clearer rules may bring higher compliance costs, but also greater legitimacy. And for the broader Web3 and crypto ecosystem, this could mark the beginning of prediction markets becoming a fully regulated part of the global financial system. So let's shift gears a little bit, and I want to dive deeper into DeFi because, right now is like DeFi winter. So something very unusual is happening in the DeFi market. If we take a look at the yields of DeFi, like the lending protocols, lending platforms, they are collapsing. So on Aave, V3, on Ethereum, deposit rates for USDC and USDT have fallen below 2%. So here's for Tether 1.72%, for USDC is 1.9%. That is the lowest level since mid-2023. For people who remember the DeFi summer era, when yields were often in the double digits, this feels like the end of a certain cycle. It's not coming back. So it raises a big question. Is this just a temporary slowdown? Or is the DeFi market going through a much deeper structural change? So let's break it down. The first issue is a very classic economic problem. So supply has exploded, but demand has not kept up. So since 2024, stablecoin markets has expanded rapidly. Total stablecoin supply jumped from about $130 billion to more than $310 billion. That's roughly 55% annual growth. But the demand to borrow those stablecoins has not grown at the same pace. And when supply rises faster than demand, the price of capital, meaning the interest rates, must fall. So you can see this clearly on Aave. As of mid-March, Aave TVL is $42 billion, and active loans is $16 billion. That means over 60% of deposits on Aave are sitting idle. In simple terms, people are depositing the stable coins, but not many are borrowing from the Aave protocol. So the lending pools are flooded with unused liquidity, and the protocol's algorithm would automatically lower interest rate, trying to attract more borrowers, but so far it has not been working. Another major driver of DeFi use is leverage trading. In bull market, traders often borrow stablecoins to run arbitrage strategies. So, for example, they will borrow stablecoins and then they will buy spot crypto and then they will short perpetual futures. So, delta neutrals, trying to hedge their positions, right? So, in the system, stablecoins act as the fuel for leverage. But recently, derivatives markets have cooled down. On major exchanges, BTC and ETH funding rates have been near zero or even negative. That means traders are very cautious. Bullish leverage is shrinking and arbitrage profits are disappearing. So traders simply don't need to borrow stablecoins anymore. And when borrowing demand drops, lending yields would also collapse. Another strategy that once drove DeFi DeFi yield was recursive borrowing, also known as the looping strategy. So here's how it works. So traders would deposit yield assets like SUSDE, then borrow stablecoins such as USDC, then use that USDC to buy more SUSDE and repeat that process. At one point, this strategy was extremely profitable because USDE yield was close to 30% and borrowing costs were about like 10%. That created a 20% arbitrage spread. But that opportunity has mostly disappeared. The supply of USDE expanded rapidly and reaching almost $15 billion, then shrinking to about $6 billion today. As the market became crowded, yields fell very sharply, and when yields dropped, the incentive to use leverage disappeared. This created a negative cycle inside DeFi. So it looks like this. So lowering trading activity means lower funding rates and less borrowing demand, then lower lending yields and even less demand for leverage. In other words, the system is feeding on itself in reserve. There's another reason DeFi yields are struggling so much these days. The macro environment has changed. Right now, the US 10-year Treasury yield is around 4.24%, and the federal fund rates have stayed above 3.6%. So investors now have a choice. They can earn higher yields in traditional finance, often with lower risk. So capital is starting to move away from pure DeFi lending. Some investors are even shifting into RWA, which connects blockchain capital to traditional assets like bonds. One interesting example is actually Sky, or previously known as MakerDAO. I'm not sure if you guys are into that protocol as well. Unlike lending platforms like Aave, Sky or MakerDAO now generates yield from real-world assets. Its portfolio includes around $1.5 billion in assets such as US Treasuries and AAA corporate debt. Because of that, Sky can offer more stable returns. Right now, SUDS yield is about 3.75%. Some USDC vaults offer over 5%. So that makes Sky something like a benchmark interest rate platform inside DeFi. Instead of relying purely on crypto market demand, it pulls yield from traditional financial system. So overall, for this like DeFi winter, what we're seeing right now is not just a small drop in yields. This could be a deeper reset in DeFi, moving away from easy money and high APY toward a more sustainable real yield model, and that shift could define the next phase of the crypto market. So we'll take a short break here. When we come back, we'll join by Elisenda Fàbrega, who's the legal expert at Brickken, where she leads legal and data protection. So she'll help us break down one of the biggest questions in crypto today, like how regulation actually works across different countries and what it really means for builders and investors. So do you stay with us? We'll be right back.
Security matters. Xapo Bank, the only way to bank your Bitcoin. Apply now at xapobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
At the tone, please record your message.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxham TV, and thanks for sticking around with us after the break. We are now joining us by a crypto legal expert who has been deeply involved in the space. We now have Elisenda, who is the general counsel at Brickken, where she focused on tokenization, crypto regulation, and data protection. She's also an educator in blockchain law, helping both builders and institutions understand how regulation actually works in Web3. Today, she'll help us break down what rules actually apply in crypto, how different jurisdictions handle it, and what investors should be paying attention to. So, Elisenda, it's great to have you with us today.
Thank you. Thank you so much for having me.
Yeah, welcome to the show. But since this is your first time here on Roxham TV Hong Kong, why don't we start with a little bit of journey of your own? Like, how did you move from traditional tech law into Web3, and how long have you been in Web3 crypto?
Well, that is very interesting journey, I can say, because I used to work in an automation company, okay, and they started introducing blockchain like 6 years ago with the self-driving cars, and it really made me super interested, and I started investigating, and it was awesome. And 4 years, I started working in Brickken, where normally I manage all the, as you were explaining very well, all the legal stuff from the company, since regulation, from all the corporate stuff that is needed from the company.
Yeah, I noticed you not only handle the legal stuff, but you also happen to teach blockchain and legal topics. So I wonder, what do you enjoy most about educating people in the Web3 space, specifically speaking?
It's very interesting because, in fact, I teach in several master's degree, and normally my students are like not young people, like they have already their jobs and they want to know a little bit more, no, about legal, tokenization, blockchain. And what I enjoy most is to help them understand this new world and how it can help them, no? And at the end, how they are already doing things, but at some point they lose this track or this knowledge of it. And with my help and their help, because I learn a lot too, we understand better this world.
Yeah, so you are handling the law stuff at Brickken. So from what I understand, Brickken is a RWA tokenization company. So for our viewers who is the first time hearing about Brickken, like, how could you explain to them in a very simple ways what does Kraken do?
It's really easy, okay? At the end, we use tokenization and sometimes or blockchain, and we get lost in this type of words. But what we do at Brickken is at the end providing a software, okay, that runs as a backend in blockchain, okay? Our users, our clients, that are the ones that are tokenizing their assets, okay? Imagine, I'm going to put an example. You have a company, okay, and you want to expand to Spain, which is where I'm from, no? And you want to expand and you need some capital, okay? Then you can use Brickken in order to digitize, okay, your shares of the company, and then obtain investors, then have more money and expand. And then with that, your investors are going to get some benefits of it, dividends, etc. How is Brickken used in this case? Okay, this company uses the technology in order to digitize their assets, but also to manage investors, to distribute dividends. It's like we have to understand it as a software that everyone can use, from Web2 companies to Web3 companies, but with this kind of additional backend technology of blockchain. I don't know if my explanation was understandable. If not, let me know.
Yeah, that was great. And what I found very impressive is that Brickken, you guys have tokenized over $415 million in asset. Like that is a really impressive figure. So like so far you have been with Brickken for quite a few years. Like what is the one project that you're most proud of yourself?
Oh wow, that is a very interesting question because we had several projects. Okay, what I would like also to say is that my position is an advisory to Brickken. Okay, our clients, okay, the company, for example, that the one that I told you, they have their own advisors because, as you know, depending on the jurisdiction, the applicable law and the procedural topics are different. No, then we need several lawyers to assist our clients. Okay. But one project that I was really invested in, because also we went to the European blockchain sandbox with them, is a company that is in fact Web3 company that it's called Hacken. Okay, what they did, it is very interesting. They converted, okay, their utility token that they already had in the market and provided the possibility to their investors, okay, to swap it for equity token. In this case, we were talking about shares. Okay. And for me, it was super interesting from a legal point of view, no, because it's very, very new. I've never seen that, which really was interesting. And also for that reason, we presented to the European sandbox together because for me was, well, a very interesting thing. And well, of course, with the lawyer from Hacking that is Valentina, we worked super together and it was super interesting.
Also, I'm learning a lot more about RWA from you because, like, from my everyday accountment, so I usually I just like get into tokenized bonds, and mostly people are very interested in tokenized US treasury bonds. So, from what I heard from you, is just like tokenized stocks, tokenized shares. Like, do you think, like, basically, out of all the use cases, RWA, like, which area you think, okay, we haven't tapped into the market yet? Like, we know everyone's talking about tokenized bonds, but like, there is other areas that we should look into.
Yeah, that is very one of my main areas of interest because I think that there are several assets or types of financial assets that we are not taking into account. It is not that we don't take account, but maybe it's not per se trend for now. Okay, I think in the following years we are going to see more instruments being tokenized. Of course, we have seen bonds, but it's also because institutionals are jumping in and they are tokenizing this type of assets. But we have a lot of different assets that can be tokenized. Okay, not just from an international point of view, okay, for instance, shares, bonds, but also in a national level of several jurisdictions, okay, for instance, quotas, revenue streams, okay. And also, I like the use case of the tokenization of real world assets that are commodities, no, which is something that I have seen, but it's a little bit here difficulty through the oracles and etc. But I think that on the following years, we are going to see an increase not just from the negotiable, tradable, common financial instruments as shares and bonds, but other type of financial instruments or instruments that are now coming to the tokenization market, as we can say.
That sounds really interesting. And again, I'm learning something new from our conversation. Like what you mentioned, we could tokenize revenue of a company as well. So, like, basically, all the stuff we see in today's world, it could be tokenized. So, my next question I would like to address to you is like, okay, for companies wise, like we could just purchase the share of the companies, the stocks of the company. Why do we have to tokenize the revenue of the company so specifically?
Well, this is a very good question. And here we have to differentiate, okay, the two types of revenue, as we can say. Okay, we can talk about debt, traditional debt, or we can talk revenue stream per se, which normally in a national level, okay, is going to be translated in some type of a specific financial instrument. It sounds really difficult, but it is not. Let me explain, okay? For instance, how is going to be used in a company in order to take the example that we did before, expand their business from Hong Kong to Spain, no? In this case, imagine we use Brickken as a tokenization software, okay? We digitize the right, okay? Here we are not digitizing per se an asset, but a right. And we have investors. These investors put money in our company. We expand our business to Spain. And we say at the beginning of the relationship, okay, if everything goes right, we are going to give you a 10% yield, okay? We expand to Spain, everything goes well, and our investors get that 10% or whatever we established at the beginning of the relationship. No? But there is revenue streams, which is a very similar use case. We have the same use case, okay? We have to translate it in our normally national jurisdiction where we are doing this kind of tokenization. For instance, in Spain, it's called cuentas en participación, but it could be other name in your proper jurisdiction, but normally it's very similar, okay, if you see it. And then you give the percentage that you also establish at the beginning, but it is not fixed. It will vary depending if you have benefits or not. As much benefits as the company has, more benefit the investors will have. This is the main difference between the debt and the revenue stream. Okay, and for me, it's super interesting because we can see like how several manners, not just bonds, can be used in the tokenization space.
Yeah, that is very interesting indeed. So, as an investor, what I understand from our conversation is that, like, getting into very specific financial product in a tokenized way, like, I'm getting the direct exposure instead of like the indirect way, the usual shares or stocks kind of way. So, like, another question I want to ask is like, I noticed Brickken have multiple partners and multiple partner platforms, like CreditFi, for example. Like, I wonder how these partnerships create real value to Brickken themselves then.
Yeah, at the end, the partnerships are two-way, no? We provide a benefit to them and they provide to us. Why is that? Well, we have partners from several topics, okay? For instance, the example that I was talking before, no? Partners that are lawyers. Why? Because depending on the jurisdiction, you will need a lawyer. Therefore, if Brickken has some partners that you feel comfortable with, you will prefer to go with them because they know how tokenization works. Also, we have partners from marketing, okay? Because sometimes a company needs marketing exposure and they don't have maybe the resources or the contacts to find this platform. Also, liquidities, okay? Sometimes clients need liquidity and investors, okay? All of these partners are integrated, okay? Also, for instance, SAMSAP, we use the KYC provider in order our clients that tokenize can use this type of services, okay? Because at the end, they have to comply normally, depending on the asset, with AML directives, okay? These not just allow us to provide a better service to our clients, but also the partners have more exposure of their services. And at the end, we have to work close together because at the end, Brickken is providing so many services that we need to have several partners.
Yes, that makes a lot of sense. So another thing I'm very curious, because like you as the general counsel, like we know Web3 is a very fast-moving industry. So I wonder how do you balance there's such a fast pace in the Web3 industry while also being very compliant with regulations? Like you're the perfect person for me to answer this question.
Well, I will say it's difficult. It's not difficult because at the end, what I was explaining before, no? At the end, if we are tokenizing a share, the regulation that applies is the same as always. If we did it properly, if we convert a digital representation, which is a digital perfect twin of that asset, we are going to apply the same law that as we do in the traditional world. Okay, that is like the main general rule that we have to bear in mind. But it's true that that type of crypto or assets that are more crypto native, here comes the difficulty because it changes a lot. And also, it is not about the tokenization per se, which is changing. Okay, no, it's not the regulation of the assets, but the obligations that the service providers, as Brickken is, for instance, we have to comply. For instance, I'm going to put an example. No, here we have in Europe, MiCA, as you know, we have DORA, we have several regulations that is, if you want to provide services, no matter if they are technological or more from a financial point of view, you will have to comply. And you have to be reading all the time the news, because sometimes things that are a little bit different, it make you change all your business model. Okay, because sometimes you are doing something and you have to adapt, no? And I think it's not per se about the assets and its tokenization, but more from a service perspective provision, we can say.
Yes, thanks for clarifying that. But like, I do want to build up on the whole compliance, like you mentioned, or the crypto law more specifically. Our viewers out there, they do find it like basically the idea of crypto law, like we don't come across that as everyday user or as investor ourselves. So our viewers are very curious, but like, let's start with the basics so everyone is on the same page. Like one question, a very popular one that we get here on Roxham TV, like if a crypto project is decentralized, then which country's law actually apply? And I should really ask you this question, like since you are the crypto lawyer, I know Brickken does more RWA stuff, so focus more on the traditional financial products, but in a tokenized kind of way. But like since you are in the field and you are the expert when it comes to crypto law, like this question, like if a general crypto project is have a decentralized team, then which jurisdiction they should follow then?
Okay, this is the main question that first day of my master's degree, everyone does. Like how I can solve the issue of advising my clients what with how they have to comply and with what. There is no, I am sorry, but there is no direct answer to that. Okay. Why is that? It will depend on several topics. Okay. But what I have is a rule that I always use. Okay. And we always can use it in order to solve this issue. Okay. How is this rule works? We have three pillars. Where is our company based? And okay, I understand the decentralization mindset, but normally, no matter if you are a DAO, if you are a limited company, you will have some place where you are constituted, okay, where you created your company. Okay. In this case, we are going to have bear in mind this jurisdiction because it is going to apply to us 100%. There is no way around this. Okay. Then we are going to see what is the product that we are offering, in which law we fall down. Okay. For instance, if we are going to fall down a case of tokenization assets in MiFID II, then our clients, we will have to bear in mind our clients' law too. Okay. But there is another blockchain project which falls down, for instance, in MiCA. We will have to have in mind also our client's law. Okay. For the reason I'm saying is that it's not just that you know where your company or your DAO or where you are based. It is also to know what is the product that you are offering and what this product constitutes. Okay. But also who are your issuers, who are your clients, who are your investors, because sometimes, okay, the crypto laws, as we can say, or also other laws, GDPR, whatever, they have transversal applicability, which means not just we are going to have to apply the law where we are based, but also the law of our investors or our clients, which is something that normally, okay, blockchain companies or crypto companies do not bear in mind. Okay. I don't know if this was clear because it's difficult. I cannot say there is a general rule, but with these three pillars, ourselves, like our company, the product that we offer, and the clients that we have, we should be able to establish which jurisdictions we fall down and therefore which laws apply to us. Okay.
So I do want to dive into that, and perhaps you could give some example, like okay, if a scam or a hack happens across countries, so can the people behind it really avoid consequences? Maybe if the scam happened in, I don't know, in let's say in Hong Kong, but if I go to another country, I don't know, like UK or somewhere like basically foreign country, can the hackers or the scammer avoid such consequences?
Yes. It would be easier or more difficult depending on where we are based. Imagine, for instance, if we are in Europe, we have the company Spain, and we have an issue with a German company that did a hack and we lost our investment, for instance. In this case, it should be easier, okay, because we have some specific procedures that allow us, okay, direct execution of rulings. The issue comes when it is a country which we do not have, well, our country do not have convention with them, okay, and it's difficult to execute rulings, okay. Normally, what happens in these cases, okay, the little ones sometimes we lose a lot of money, okay, as a company or as an investor, we can lose a lot of money, and maybe the return is not the best, okay. Sometimes we have to address if it really is interesting, okay, to go against that company, for instance. But normally in this type of cases where has been a hack that has been very big, what it happens is that several investors, okay, they unite them and they go against that company, okay, several jurisdictions. And then each jurisdiction tries to execute it, okay, and they create like a collaborative claim, we can say, okay. Therefore, it is possible, yes, and it has happened several times. We have a lot of examples, but it is true that it is a very, very large process in most of the cases. Because imagine managing all the affected parties, all the lawyers of the affected parties. Also, you have to bear in mind that sometimes several procedures started in several countries. Then a judge has to reunite them and put it in the same court in order to be able, okay, to distribute after when the ruling has been final, the benefits that it could have been obtained or maybe not. Also, there are not good cases where the outcome is very sad, but it doesn't like solve the issue and no one gets repaid of their losses, no. But this is how normally works. Like we have tools, yes. Sometimes these tools are more useful than others, and sometimes they are more fast than others. This is
Yeah, I
the
just
issue.
think it sounds really sad, like hearing this
Yeah.
from a crypto lawyer, because like from what I just understood, like if the scam or the hack is not a very high profile case or the money it wasn't involved like a really huge amount of money, then probably the scammer or the hacker could get away from scamming smaller investors like you and me or the people who are watching Roxham TV. So am I guessing that part correctly? So if so, like what are the biggest red flags we could watch out for in a crypto project?
Well, first of all, yes, you are right, but it's true that also I'm talking about big cases. Sometimes the scams are really easy to detect, okay, and the police can track, okay, where this scam comes, and they then go after them. Okay, I'm talking about big cases, which the company or the people doing that know what they are doing, and they are trying to to avoid being fined all the transactions that they did, okay. said that and clarify it about how we have to check, no, before investing. For instance, if we are talking about what we call retail investors, okay, even in this case, what I would recommend, no, imagine that you want to invest into a tokenized tokenization project, or you want to purchase an utility. Okay, normally in general terms, what we will have to find depends also on the asset or the asset that we want to purchase. Okay, for instance, if we want to purchase some kind of utility, etc., what we are going to need to review is the white paper, the documentation of the company that is selling it. Also, do a market research. See if there are competitors of that company that you are purchasing an utility. Okay. We also have to know what is that we are going to purchase, because sometimes people purchase some coins that do not have value per se, are just a speculation. Okay. It is fine, but we have to know that we are doing that. Okay. We have to be thorough, because it's not the same an utility of a company that has a team behind it, that has projection, that has a white paper, that has milestones, as a coin of a company that just has speculation purposes. Okay. Also, if we are going to purchase another type, okay, of asset, okay, digital asset, we have to be thorough too. Okay, maybe when we want to purchase some digital shares of the company, what is that we need to review? Well, of course, the same as the utility, but in more detail, like the bylaws of the company, who are the shareholders, how is our rights going to be recognized, what is going to be like, we are going to have dividend rights, we are going to have voting rights, how it's going to work in that jurisdiction. Okay, we have to know also where is the company that we are purchasing from. Okay, also what we were discussing now, if we are going to purchase an utility token, first of all, review which law applies to that company. Okay, because it could be possible, what we were discussing now, that you may have issues in the future if you need to do some type of claim. Okay. At the end, what I would recommend is check everything about the company that is behind it, because sometimes we forget, no? We think as crypto or blockchain as something very ephemeral or very non-tangible, but at the end, of course, it should be someone behind it. Review who is this someone. It is a company, it is a person, why they are doing this, which is that I'm getting from it, you know? I will say that, like, it's the main red flags or the main things that I will like address or advise to review.
Yeah, those are some really good tips for our investors or viewers on Roxham TV. And at the end of the day, like, we are making the financial decisions on our own. So we should do the due diligence, like we should hold accountability, like despite scammers out there, they're being very despicable. But like speaking of the regulations or the jurisdiction across different countries, I know that the MiCA law is now live in Europe. So, like you as the crypto lawyer, do you think like it's making everything safer, or do you think there's still some areas that bad actors could possibly still get around with now that MiCA is in place?
But it's a very good question, because at the end, I think that MiCA is going to help in some cases, okay, as we were talking about utilities and these kind of things, that we are going to be more thorough about AML, like like AML procedures that have to be in place in the companies, again, companies that are trying to sell these utility tokens, which is going to help the investors, no, these retail the retail investors that are trying to purchase these utilities, because they are going to be able to have more information. They are going to be more protected. Okay. Also has its handicaps, because sometimes could be that I don't want to say something that is not correct, but we can say that sometimes regulators and the companies are maybe not aligned, or sometimes they need more collaboration in order to pursue laws that make more sense. Okay, for that reason, I always advocate for sandboxes, which I know a lot of people are retractors of them, but I really advocate for them because I think it's very important regulators and the private sector work together, and institutions, like I'm thinking also with institutions, work together to understand how business works, how retail investors can be protected, but in a manner that we do not disincentivize at the same time the private sector, which is, I think MiCA is a very good step forward for the crypto assets that were at some point in a gray area. Okay. And I think retail investors are now more protected, which is for me very important as a lawyer. But at the same time, I think that we have to go a little bit further and try to work more in a manner that companies are also helped in order to be compliant, because sometimes it's not just that it is difficult to apply it, but sometimes also do not make sense with the business. Sometimes regulators has in mind their own set of business that should exist, but at the end, a lot of business exists, a lot of approaches of the tokenization, of, I don't know, custody. There are several types of business. And of course, for now, it's a good step forward, but I think we should work more on that from a regulator,
Yes,
private sector perspective.
Yes, that is a great perspective indeed. However, from what I heard from different European projects talking about the European market for crypto specifically, like the MiCA law kind of like giving them kind of like stifling innovation. But from what I heard, like MiCA kind of like offer more pros compared to the cons, in your opinion. So I wonder, do you think like MiCA would kind of like push the European founders or the tech innovators towards something maybe tokenization where there is the legal ground being established already? Or you think there's still some area for new innovation to be established inside the European land?
Like, do you mean if it's going to help or it disincentivize companies, or what is that? Like, can you explain a little bit about this, because I want to understand better.
So do you think the MiCA law would kind of like foster the RWA sector specifically, or do you think like MiCA will still allow other innovation apart from RWA?
No, I think it's going to allow more innovation, but at the same time, I don't think it's making less or more innovation. I think that now companies have to have more capital than before. Okay. The issue was that before, okay, companies were created, and for that reason, a lot of companies from the Web3 environment disappeared. They created in a manner, okay, trying to avoid to comply with maybe not written laws, but laws that you could understand that were going to exist. Okay, for instance, taking as example the tokenization. Maybe MiCA didn't exist, and you wanted to tokenize an asset and create an asset reference. Okay, in this case, you could be, as a lawyer, and this is our job, no? You could be a little bit smarter and say, okay, maybe I don't have now applicable law. But what we do is analogy application. Okay, lawyers, we don't have a specific regulation of something, but we can apply analogically some type of law. In this case, okay, imagine that you wanted in that moment to tokenize an asset reference, you could apply MiFID II requirements, AML requirements. You could do it, and you can construct your company from that. What happened? A lot of companies, or they didn't have the legal advisor that was needed at some point, or they didn't want to do it because maybe it was too expensive. What happened now is that they are disappearing, this type of companies, because all their technological infrastructure has been constructed in the fundamentals that are not correct. Okay. For that reason, I think MiCA is going to help new companies to understand how to construct their companies in a better manner. Okay. But at the same time, less innovation is going to appear because, of course, more money is going to be needed. Okay. And sometimes, well, we don't have that type of possible investment at the beginning. Okay. But, and going back to what I was saying before, no, there are some gray areas still that we don't know what we have to do. For instance, we have custody regulated, okay, in MiCA, like if you want to provide custody services. But what happens to that companies that use custody providers? Who is the one that has to apply this MiCA license? The one using it, the one providing it. It is the gray area where I think it's going to be where we see more issues there, but I think MiCA is on one hand disincentivizing, but also creating something that is better for the market.
Yeah, that is a perfect segue for me to ask another question, just to build up on that a little bit more. So, like you mentioned, founders in Europe right now, there is still innovation possible, but it's becoming more difficult. Maybe you need to have a relative bigger amount of money or investment to start with. So, I wonder what is some practical tip or advice you can give to founders when they are starting out this project. They have this amazing idea and product and trying to move Web3 forward. So, however, there's some restriction in maybe in the law sector. Is there any advice you could give early founders like that?
Yes. First of all, like have a lawyer, because you will need better assistance. Okay, because at the end is that is the issue. Sometimes we want, like, founders no want to go fast, want to have their product. They see their product, they love their product. Okay, and sometimes they don't see their flaws. And normally at the beginning everything can be solved. Okay, because imagine that you want to create, let's use tokenization because it's what I am most used to it, and we know now because I've been talking for 30 minutes approximately, and I think we now know a little bit more. But imagine that you want to create a tokenization platform, no? You have all the technology and you are a super, super good developer. But then you do not have in mind that you need to have AML procedures, which at the end, your product is not going to be used. You all the time, all the money that you put there, you are going to lose it. For that reason, better to do an assessment at the beginning, because normally these kind of issues can be really easy solved using an external provider that you can integrate in your platform. There are several paths that you can go, and that are not that expensive. Okay, for that reason, recommendation: have good advisors, legal advisors. Okay, be thorough with that, and also be smart. Expend your money smart. Okay, we have a lot of regulations, but it doesn't mean that all of them apply to you. Okay, because what I have seen recently, and it's very interesting, I have seen the opposite thing. People are not trying to avoid apply law, but sometimes they apply it in a manner that is incorrectly. They spend a lot of money thinking that they need to do it. Okay, they are applying to custody licenses, to exchange licenses that maybe they don't need because they are not providing that service per se. Okay, therefore, if you're a founder, recommendation: understand perfectly your product. What is that you want to provide? Engage a lawyer and explain to the lawyer, because sometimes lawyers, we can be with technology a little bit. We have to explain our lawyer, okay, the things in a manner that they understand. Okay, and lawyers, if you are hearing me, please do not say no. We can always say yes, and we can find ways, which is the main recommendations I will tell to founders as lawyers.
Yeah, I mean, I happen to agree with you. And the founders that I've come across during my crypto journey have been quite a lot. But like one thing I notice about them is that they happen to have so many ideas in their head. Like they try to bounce around different products all at once. And I agree with you, like having that legal professional advice would definitely help founders like building up that product to be a much better suitable for the market out there. So like my final question I want to ask you, like how do you see the RWA market going in the next 5 to 10 years? Or if there's like any specific RWA sector that you are very, very bullish on, maybe like tokenized stocks or maybe something else that we haven't talked about?
Okay, sure. In 5 or 10 years, I see that we are going to go to the institutionalization phase. Okay, I think that we had already the educational phase. We are now in the commercialization phase. We are seeing a lot of companies starting to use it. No, well, use blockchain, but also the tokenization. Okay, but I think now we are in the right path, okay, with all the laws that are now in place, that jurisdictions or regulators understand better, okay, how all blockchain and tokenization works. I think we are going to the institutionalization phase in 5 years. Okay, I think it's going to be used in a daily manner. Okay, not just as a something new, but as a tool, okay, as a tool that banks or other institutions are going to be to use because it's faster, it's less expensive, okay. And I think this and something that I am bullish of. I was now well before talking about not just the in financial instruments that we know bonds, but I was also talking about I am really bullish of these assets that are special, no, that we are seeing that also are coming to the market, are starting that to be analyzed in sandboxes, are started to be analyzed by companies and how they can be used, okay. And also about this kind of example that I put, no, these kind of crypto actives or crypto assets that are going to be transformed to another type or being used as an investment and in order to obtain equity, like this kind of new manners of business using digital representation of assets. And I would like to see, you know, how the regulators approach it and how also founders and companies and all the market approach these new manners of business and investment.
Yeah, I like that. So, Elisenda, it has been a great pleasure having you here on Roxham TV. So, for our viewers out there who wants to know more about Brickken or basically your takes on the market or maybe some advice from you, possibly like legally, like where's the best way to reach out to you guys?
Of course, in LinkedIn, Twitter, Telegram, like or our webpage www.bricken.com. You can find more information, and of course, feel free to reach out to me too.
Amazing. So there you have it, guys. Elisenda, the crypto legal expert we have here on Roxham TV. We still have more show lined up here on the TV program by other hosts. So do stick around, don't go away. So as for my show, I'm here Monday through Friday, starting at 3 a.m. live. So if you don't manage to catch my live shows, don't worry, the recorded version is also available on both YouTube channels. So Jam Crypto YouTube and also Roxham TV YouTube. Thank you guys for watching and I'll see you guys tomorrow.